Now we turn to the part on financial statements. Financial statements are commonly used in the business so that they or the investors can understand the financial situation of the business. The most basic financial statement will be related to accounting. And basically with the accounting system, it keeps track of all the relevant financial flow so that we can use that kind of information to support our decision making. For any company, we look at their accounting data, accounting statement or financial statement. It helps us to understand how healthy the company is in terms of how they are, the risk of their business right now, how profitable they are right now, or how do they use their profit to invest on their own business. And a lot of companies, they'll have business and customers, but if their cash flow has problems, they may still encounter difficulty running the business. So we can also find that kind of information from some financial statements. So what we can do is we need to learn some basic financial statement knowledge so that we can know the conditions of the companies. But in a simpler way, we can also take the accounting data, the numbers out of the company's operation, and utilize those numbers to compute certain ratios. Those ratios are very simplified of the overall business situation, but it still provides some insight for us to understand or to get a very rough figure on the conditions of the company. So we are going to go through some of the financial statements and later to look at certain ratios and try to understand how these ratios may be helpful for our understanding of the financial situation of the company. Well, in the business, there are many kinds of business. We can talk about the business of pharmaceutical industry, many different kinds of manufacturing industry. We can talk about service industry, airline industry, mining industry. They are all very different. But the common part of these companies are their financial flow, their financial situation can be characterized with the same accounting system. When we look at the accounting, when we analyze their situation based on their accounting data, we can come up with a similar understanding, if not identical understanding, of their financial situation. So it is a common language of business. We can communicate on their profit, or we can communicate on their debt, or some other accounting terms. And basically each company need to provide, particularly public company need to provide detailed information, accounting information, so that initially the company people knows their own condition. And a lot of companies were invested by general public, so they also need to they have the responsibility to well keep their accounting information, and sometimes may need to be audited before they present it to their investors or present it to the government, so that proper measure can be taken on the involvement in the companies. There are some popular statement which can be used to understand the financial status of a business. You can see that there are 4 that we are listed here. I think from your basic accounting course, you have probably had learned of all these 4. So I'm just going to go through them very quickly. Income statement is basically telling people how much profit the company make during the previous year. Right? It's usually it's a summary of all the accounting activity during 1 year, so you can know that their income and their expenses, and you add them together, you got this net profit, and this net profit will reflect the profitability of the company. And profits sometimes will be retained by company. Usually profits will be distributed as dividend to stockholders, but some can be retained. And we also look at how the retained earning is being used. Basically, a lot of them will be used for reinvestment into the business, and we want to know how these return earnings are being used, so that even the investors or stockholders did not get the dividend, but they know that these are retained earnings, these are dividends that they were supposed to get, were used in a much better way in the future growth of the company. So it is something very important to not only to the company, is also to the investor. A statement of cash flow is about cash flow, the cash on hand. So usually the simple way of look at it is at the beginning of the fiscal year, how much cash you still have after the fiscal year, at the end of the period, how much cash that you still have, so that you can run your business more smoothly. And balance sheet is to understand the financial position. Right? You have your asset, and assets equals to liability and owner's equity. So these are information that need to be presented, so that we can have a picture, understanding, a feeling of how big the company is, and how much of them belong to or generated by the initial investment, and belong to the stockholder, and what others come from the company's liability. So all these we can still have more statement, or even more detailed statement, but these statement basically provide us a very reasonable view of the status of a company or a business. And you can imagine that the value of the company, the stock value of the company, depends on how they present the company, or how profitable the company appear to be. And of course, it depends on all these financial statements and so on. However, for a company to create this value to be presented to investor, to the market, basically a lot of information need to be provided by engineers, because the products, how valuable the products, right? What kind of product to be produced, what kind of service to be produced, and so on, and how are they going to be produced? All of them will influence the cost, or potentially the revenue of the product. So such kind of information need to be provided by engineers so that they can be combined into the company's strategic policy and all subsequent decisions and reflected in their accounting information, and subsequently it will influence the perception of the value of the product and the company and the stock price. Here we can use a more detailed example to look at these statements. The first one is balance sheet of Dell computer. You can tell. I don't think I want to go into the detail. Usually you have the figures from the previous year and the current year, so you can make comparison. And as I said earlier, that in the balance sheet there's assets which equals to liability and owner's equity, and you can tell that here we have this year, assuming that year 2000 is the current year, and at that time we have asset equal to the addition of liability and stockholders equity. Adding these two together, getting this number, and these two numbers should be equal. Okay, so asset belong to either stockholders equity or is the company is still owing money to some other parties. So you can look at this. You can look at whether or not liability is too high, and so on, and asset in terms of the size of the company, whether or not we have sufficient size. So these information tell us a little bit about the status of the company, the position of the company. The income statement tells us the how profitable. Okay, so you can see that these are, in this statement, talks about revenue. It talks about all other income, subtracting from subtracted by different cost, and you get profit, you get gross margin, then you deduct tax and so on, then you get your net income. Okay, so you want to see how profitable you are, you can use the net income compared with the revenue. Okay, and the profit may not be distributed. Net income may not be distributed totally. They may some be retained, and you can also see the retained earning. Okay, so this is basically telling you that how profitable the company has been over the past year. And cash flow statement, again, we have different kind of cash flow. We have cash flow for operating activity, cash flow from investment or investing activities, or from financing activities. Right? All these activities have different purposes and have different consequences. So what we are going to look at is, okay, after so many different kind of activity, how much cash that we still have at the end of the period, and we can look at or compare it with the period before, and get some sense of whether or not our cash is getting tighter or looser. So we can look at them all together, right? So the previous slide show a lot more information, a lot more detail. But if you look at the main outline or main structure of these statements, all of them together, from balance sheet to income statement, or return earning statement, and cash flow statement, and you can see them, and you can get a very good understanding of the overall situation just based on the statement. For such a big company with so much information there, but with a few statements, quite a lot of insight on the company, and can in a lot of cases help us to make decision on our investment plan or our involvement in the company. So that's the purpose of accounting and relevant financial statements.